Good morning, ladies and gentlemen. What's up, traders? What's going on? Welcome back and happy money freaking Monday. Hit me with a big old good morning. If you guys are inside of chat, who is here this morning? Who is ready to rock and roll? Who is ready to have an amazing day in the market? Because I'll tell you what, guys, I am freaking ready myself. Ready to make it happen, ready to have some fun, ready to see what kind of opportunity we have in the market for the day. Rock and roll and crush it with you guys. So, if you're inside the chat, you guys know the deal. Hit me with a big old good morning. And if you guys are over in the Zoom and you're feeling up to it, go ahead and hit me with a good morning. Feel free to open those mics. It's okay. I love hearing your beautiful voices. That's what I'm talking about. Julie with the good morning. Good morning, everybody. Again, happy Monday. Let me see if I can get this webcam to go. It's not working. Hey, there's my beautiful face. Hi, guys. All right, we are ready to rock and roll, team. Who do we got inside of chat right now? We got Spencer. What's up? And let's welcome Spencer officially to the Market Mastery team. He's ready to rock and roll. He's ready to take it serious. He's going to take those next steps, and we are going to make Spencer the best trader here in the next couple of months. So what's up, Spencer? Good morning. Zach, Jonathan, Steve, Christy Q, Eric, Andy, Logan, Kenyana, Jonathan, Corey, and I'm out of breath. Everybody else, good morning. I love you. All right, let's dive into it, guys. Let's discuss what we got going on for today, for the week, because we got a lot going on, guys. So let's do this. Let's start with the earnings calendar for today, and let's review what we have for earnings this week. And then we will probably have some time here this afternoon. We could look at all of these large cap earnings that are set to be released this week and go through and do some daily analysis, see if we're coming into some key supply or demand zones, and see if there's going to be any awesome swing trades through earnings this week. So we can definitely do that at some point today. But here inside of Market Chatter, if you guys don't know, just go over to the market data section, go over to weekly earnings, and this is going to show you all of the weekly earnings for this week. So what do we got coming up? What are the most anticipated earnings releases of this week? So tomorrow after the close, we have AMD, Microsoft, and Starbucks. Come in here Wednesday before market open, we have Boeing. Wednesday after the close, we have Qualcomm, we have ARM, and we have Meta. Thursday is a big day. Thursday night, look at what we have set to be released. We got Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Square. I mean, we have a lot of amazing earnings coming here Thursday as well. So, I mean, we have a full slate of amazing earnings coming up this week. And again, these earnings reports could be the catalyst to really start to see some nice movement in the market. And it also gives us an opportunity to look to see if we have any awesome swing trades setting up into some key earnings. So I'm really excited for that, guys. So we do have a lot going on this week. We have a lot of big name earnings set to be released. And then we go take a look at the economic calendar. We have a lot going on this week. A lot of key data, a lot of key events. So let's talk about it. What do we got going on today? Well, today at 10:30, we do have Dallas Fed manufacturing data set to be released here at 10:30. Be mindful of that. Other than that, you guys are in the clear for the rest of the day. Coming into tomorrow, we do have CB consumer confidence data at 10, and then we have JOLTS data set to be released at 10. Now, this is of high importance. This is definitely the type of data that the market will move to. So tomorrow at 10 o'clock, we got JOLTS. Coming into Wednesday. Wednesday's a big day for the market, but again, I don't really expect to see the market really react or move too much. Based on the Fed's interest rate decision, we know that the Fed is going to hold rates steady. We're not going to be lowering rates really until September. September is where we have that 99% chance that we see our first rate cut. And that's what the market has priced in. So I don't really expect to see any kind of reaction from the market based on the Fed's rate decision, knowing that the Fed is going to hold rates steady. But coming into the press conference, hey, Jay Powell's going to be speaking. Again, those algorithms definitely trigger and move based on remarks and keywords. So it'll be important to watch the market during the press conference tomorrow, or not tomorrow, but Wednesday at 2:30. And then just, again, see how the market moves from there. Coming into Thursday, we got jobless claims in the morning, like always. We got ISM manufacturing data set to be released at 10 o'clock there on Thursday. Then we got non-farm payrolls and unemployment rate data here on Friday. So, I mean, we have a lot of key events, a lot of economic data this week. And again, we have a full slate on the earnings calendar. So this is going to be a busy week. It should be a fun week. We should see some great movement. We should see a lot of really awesome opportunity just across the board, guys. So get dialed in, get locked in, get serious, get focused, because this is going to be a really awesome week, right? And we got 3 days to conclude the month. So we got 3 days to take advantage of this opportunity and end the month strong and, hey, even more profitable. And then start the month of August strong and profitable as well. This is going to be a really great week, guys. All right, so you guys know what's going on today. Nothing really happening. We don't really have any earnings set to be released here tonight. But come tomorrow, that's when things really start kicking on off, guys. So that being said, let's take a look at the SPY. Let's break everything down, get you guys prepared for today's trading session. And then we'll go from there and review any stocks that you guys have on watch for the day and make sure that you guys are prepared as well. So here with the SPY, there is a key level that I want to watch today. This is going to be our line in the sand. This is our LITS, L-I-T-S. All right, so that zone here between 547.44 to 547.91. It's a daily zone. We just came up to it here in pre-market. We hit it. We got rejected. We're starting to fall here a little bit. That is still a key level to keep on watch here for today. All right, so first key level of resistance, 547.44 to 547.91. Above that level, we go right up into this daily gap, right? So we got this big old daily gap here. Top end of the gap is at 553.28. Bottom end of the gap is at 549.18. So if we break through that line in the sand, the next area of resistance will be the bottom end of that daily gap, which is at 549.18. But if we ever see the SPY breaking through that 549.18 and we hold it as intraday support, hey, we could see the SPY come up and fill that gap up around 553.28. That's realistic. But the bottom end of that gap will be some key resistance. Not to mention, it's right up against the 20 EMA, right? So, I mean, go back and look at the daily and look at how many times we've come down into the 20 EMA and we've held it as support. Then when we get below it, we stay below it as resistance. Then we get above it. We grind it as support. We get below it. What can we see it do? Flip and turn resistance, right? So the 20 EMA is sitting right there at the bottom end of the gap as well. So there is going to be some good resistance up around 549.18. If we can't break above it, we could see a nice drop on off today. But if we get above that 549.18, we get inside the gap, we're above that 20 EMA, it's very realistic we come up and fill that daily gap at 553.28. So that's going to be one initial game plan for today, guys, right? If we break through that line in the sand, we hold above it as support, I would be interested in playing this long into the bottom end of that gap. That's about $1.50 of potential upside, right? Give me $1.50 on a trade and let me capitalize on the full move. Hey, we can make really good money on a $1.50 move. So I'm interested in that trade, right? So if we break that line in the sand, we hold it as support, I would look to get long up into the bottom end of that gap and that daily 20 EMA, right at 549.18. First target. If we break above that daily 20 EMA, we get inside of the daily gap and we hold all of that as support, I want to be getting positioned correctly to possibly hold a runner, maybe to get some follow through up to the top end of that daily gap at 553.28. So will I be trading 0 DTEs on this long? No, I'll be trading weeklies just in case we get some follow through. I don't want that theta to kill me. And if we are seeing some potential follow through to fill the gap, maybe this day trade turns into a little bit of a swing trade where I can hold some of that position overnight as a runner. So I want to be thinking ahead on this type of trade based on my initial expectations. Would I trade 0 DTEs and just simply look to scalp this? I would not. I would want to go at least Friday expiration, right? Just in case it is looking good towards the end of the day. Maybe I want to hold partial position overnight as a swing trade to see if we do come up and fill that gap and move higher. All right. So that's the long plan today. If we break and hold that key line in the sand level. And again, if you guys are just now tuning in, wondering, hey, where's that zone at? It's between 547.44 to 547.91. And we have our long plan in place. We have our 2 first targets, and we know that we want to get positioned correctly just in case we see a good close and we want to hold some of this position overnight as a swing trade. Just be thinking ahead. Okay, and what's the short plan going to be today? The short plan is if we come up into this line in the sand and we just can't break above it, and we get a nice solid rejection to the downside. If that's what we see take place, I'll be looking for an area to get short, expecting we see a little bit of follow through to the downside. And where do I think the SPY could be going next? The next daily zone of support we have is going to be down here between 542.22 to 542.63. That would be our first key level of support here for the SPY today. Okay, so you got your long plan in place, you got your short plan in place, and it really comes down to what is the SPY going to do up against that line in the sand, if anything, right? 3 things are going to happen. Number 1, we never get there in the first place. Number 2, we come up, we get rejected as resistance, we get short. Number 3, we break it, we hold it, we get long. So again, odds are in our favor, right? There is a, 66.6% chance that we come up to this line in the sand and something happens. So I want to keep it on high watch and see what happens, if anything, and go from there and see if we have a nice trade presenting itself. All right, so that's what we got for today here on the SPY. If you guys have any questions, let me know. We can always go back through the SPY, review it, answer any questions you have. But let's go ahead and move on to the Qs, and let's discuss what we got going on with QQQ right now at this point in time. All right, we do have a line in the sand here on the Qs up between 467.95 to 468.18 here on the Qs. That is a key make or break level, right? It's going to be Thursday's high a day, but it's also the top end of that daily gap prior to that gap up. There's going to be some resistance right there here on the Qs. And if you look at the Qs, where do we have overhead resistance if we start to break through that line in the sand? Well, just look to the left and go up. We have this big daily gap up here on the Qs, right? And so that daily gap on the bottom is at 474.24. And the top end of that daily gap is up at 480.18. But we see that we do have our key level of resistance right here. Top end of the gap before we gapped up. And it's also, again, Thursday's high a day. So that's going to be my line in the sand for today. That's my make or break here on the Qs. Okay, so if we are able to come up and break through that line in the sand here between 467.95 to 468.18, if we are able to come through and break it and hold it as support, I would definitely be interested in getting long. Where to? The bottom end of the daily gap at 474.24. Okay, and that's also going to put you up against that daily 50 SMA. So there's going to be a lot of resistance up there around the 50 SMA and the bottom end of that daily gap at 474.24. So that's going to be our first main target here on the Qs if we do see the setup to the long side. And then if we are able to break inside of that daily gap and get above that 50 SMA, we could see the Qs fill the gap up around 480.18 as our second target for today. But we always want to have a opposite plan in place just in case to help us remove bias for the day, right? Because who's to say we come up and break that zone? We may come up into it and see a nice short opportunity present itself and see a nice strong rejection. If that's what we see take place, I would happily get short, expecting a little bit of downside. Where to? First area is going to be this multi-day uptrend that we see here that we have on the Qs. So if you go back into Thursday's low of day, you can connect all of these higher lows with a trend line and see that we have been grinding this trend line over the past couple of days. So if we come up into that line in the sand zone and we set up to the short side and get short, where's the first target going to be to the downside? Back into this uptrend, because it's been holding this uptrend as support the last 2 days. That would be PT number 1 here on the Qs, back into the uptrend. If we ever see the Qs cracking that uptrend, we could really start to see a little bit of downside. And how much lower do I think we could be going here on QQQ? I would say we have realistic potential to get back down into this little demand zone that we have here on the Qs, where we have this little period of consolidation, we have this gap up, and then we just started to really move to the upside here on the Qs. And if you look at it as well, it's up against some of these fib extension levels, right? Not fib extensions, but these fib retracement levels, right? We came down to the 50% here on Thursday. We had a nice bounce. And then on this shorter term fib to the upside, we came down into that 78.6 and we bounced right into a lot of key support in this little demand zone down here that was created on the daily. And we have some overlapping points on the 4 hour, the 1 hour as well. So there's going to be a lot of key support down there, pretty much up against, what is that? Thursday's low a day? Pretty much up against Thursday's low a day, right? Back down around where that 78.6 retracement is. And we also have that bigger term fib, right? That 50% that falls right there around Thursday's low of day. So if we see the Qs come up into that line in the sand and we cannot break through it, we know our first target will be, right, that trend line. But if we ever crack that trend line and we keep moving on lower, our next main level will be down around 455 to the downside here on the Qs. But there will be a few other pit stops along the way down. It's not like we're going to crack the trend line, for example, and just come straight down to 455, 454, right? You're going to see it come down into some of these lower levels from Thursday and Friday. So like first target to the downside would be these lows from Friday, right around 461.35. That would be your first target to the downside. Second target to the downside, right up against these lows from Friday, right around 460. Then these lows from Thursday, right around 457.34. And then we could see it back down around Thursday's lows into that key zone here on the Qs. All right. So can we make it all the way down to that 454, 455, our main PT? Absolutely. But there are going to be some other areas where you should be looking to lock in some profits here on the Qs. If we do see that trend line crack, if we do see a continuation move to the downside into these previous lows from Thursday and from Friday, all the way down into that lower zone. All right, guys. So that's going to be the game plan today here for the Qs. My trading view is acting all kinds of crazy right now. My chart just completely disappeared. So let's give it a second to see if it comes back, because I don't have anything on my chart, like at all. It's completely frozen right now.
Just to add to your triple Qs, and then another level of confluence is around the 453 level, would be about a 10% correction off the high in this market.
Yep, 100%. I was doing all of my analysis over the weekend, and the SPY coming down into this lower zone again. That was about a 5% correction. And then with the Qs coming into this lower zone, we were looking at about that 10% correction. So, I mean, it's a really key area of support. That's a 10% correction here on the Qs. And the SPY coming down into some pretty key support. It's about a 5% correction there on the SPY. So do I think we could start to see the market find a bottom, start to transition, and start to set up? That suggests, hey, this is the bottom. We're starting to reverse, start to move to the upside. Yeah. And I think all that could start to take place off these lower levels on the SPY and the Qs. So we'll be watching the SPY and the Qs very closely this week and see if we have the market putting in that bottom, right? Really setting up and starting to reverse from the short-term downtrend, then start to set up for that reversal back to the upside, where we can start to look for some longer dated swing trades, right? Back up into these all-time highs on the SPY and the Qs, 100%. So definitely want to be watching that as well and seeing if there's any kind of opportunity for any swing trades here on the SPY and the Qs coming on up this week. So let's get all this crap removed. So you guys are all set with the SPY and the Qs. My 5-minute chart still on the Qs is all jacked up. The SPY's not so bad, so we're good on that. But yeah, if you guys have any questions about the SPY and the Qs, let me know. I like the Qs a little bit more than the SPY today, just because we have a little bit more of an open window to see the Qs move from like zone to zone. Compared to the SPY, you know, especially looking at the SPY long, it's just pretty tight to the upside into the bottom end of the gap. It's about $1.50 of upside. When I look at the Qs and I look at the separation from zone to zone, there's a little bit more of a window to see the Qs move. So I'm going to put more of my focus on the Qs here at the start of the day, and still obviously look at the SPY and see if the SPY is setting up for us. That's if the Qs will load that 5-minute chart, which, yeah, it keeps just disappearing on me. I have no freaking idea what's going on right now. But let's go ahead and look at the rest of the watch list. Let's discuss what we got going on. Then we'll have some time to look at your guys' stocks as well. Take some time to get you prepared. Tesla, pretty simple. We had this plan in place on Friday. It just never came close to giving us an opportunity to take Tesla long. But it looks like we may have a shot at Tesla today for a gap fill long opportunity. All right, so if you look at Tesla on the daily, we have this initial gap. We definitely know the bottom end of the gap is going to be right there around 226. It's very definitive. That's the bottom end of the gap. The top end of the gap, there could be a few different areas. I'm taking this first initial low as my top end of the gap. Technically, the top end of the gap is way up here, off the low a day prior to the gap down. But if I look left, I definitely think that this will be an area of potential resistance. This will be an area of potential resistance before we even get up to the true top end of the gap. So with that being said, I'm going to bring my top end of the gap down to that candle low. And that's going to be my first main target for my initial gap fill. If we break that level, then it'll come up against that low. That'll be my second target. And then if we break that level, then all the way back up to the low a day prior to the gap down for a true gap fill. And that'll put you all the way back up around 245. But initially, I'm going to set the top end of my gap off the low a day from July 12th. That puts you at 233. Okay, and it's very simple. I want to see Tesla just go ahead and break above 226, get inside of that daily gap, and then hold the bottom end of the gap as intraday support right at that 226 level. If we see that take place, I'm looking to get long up to 233 for a gap fill on Tesla. Okay, so that's Tesla. Pretty clear cut, pretty straightforward. And then we got Meta today for the same thing. We got a gap to the long side here on Meta. So look at this gap that was created from last Tuesday into Wednesday. We had a low of day on Tuesday, right around 487.93. We gapped down on Wednesday and put in a high a day right around 476.59. That left a pretty nice big gap here on Meta. So if Meta is able to get inside of the gap today and get a nice break above 476.59, and we hold that level of support, we could see a gap fill long opportunity. We could see Meta get up towards around 487.93 here today. So I definitely want to keep Meta on high watch as well. But I want to go and readjust that gap level and make it literally just penny to the penny. So let's readjust the gap level on the bottom, on the top, and I'll give you those new exact to the penny gap levels. So bottom end of the gap, 476.29. Top end of the gap, 487.73. Okay, and again, we want to see Meta break inside the gap, hold the lower end as intraday support, set up long, and then we could look to play this long up to the top end of the gap here on Meta. Right? That's really all I got for you guys. That's all I have as far as opportunity today. Now, when the market opens, we will find some time today to discuss a few of these swing trade opportunities that we have. We can discuss SLB. SLB looks like it could be setting up for a nice swing trade, right? So we'll review that at some point today. Coin as well. We'll take a look at that. And then maybe INTC for a nice swing trade here as well. And we'll definitely review those here after market open. All right. Other than that, do you guys have any questions today? You guys all set with the SPY, the Qs? And are you guys all set with Tesla and Meta? Just want to make sure you guys are ready to rock and roll for today, guys. We got a couple minutes till market open, so if there's anything that you're looking at, any stock that you want me to review, go ahead and let me know. Let's take a look at it. We got plenty of time, guys.
No question, but just something to point out to the new traders, especially with some of these big tech giants announcing earnings this week. The IV crush post earnings, just to bring that and bring it to everybody's attention.
Absolutely, 100%. And so we're not taking any trade blind through earnings, right? Even if you're like, yo, but this is the best setup I've ever seen in my life, I got to get long. And even if the stock gaps up through earnings and you would be in profit, again, the IV crush is brutal, guys. Like, we've seen it happen so many times. I mean, what was it? Maybe, I think it was last year with NVIDIA. We took a screenshot of the options chain ahead of earnings just to see what the premiums were. And then the next day, and NVIDIA gapped up like 40, 50 points. And so we were looking at some of those calls that should be deep in the money. They were still lower than where they were the previous day before the close, even with a 40-point move to the upside through earnings. Why is that? The IV crush. The IV went from like 170 back down to like 80. Right. And so, again, be mindful of that. That's why we don't just take trades through earnings blind. Even if you're on the right side of the trade and you get a massive move in your direction, that IV crush could absolutely kill you. As far as earnings plays, we'll apply STIR's methodology, right? Are we seeing any of these big, large cap companies coming up into key supply zones or coming down into key demand zones the day of earnings? If so, we could take a trade through earnings inside one of these key institutional supply or demand zones like we did with Disney a few months back, right? Disney was pushing into key institutional supply the day of earnings. We took put contracts, the thing gapped down, and we made a lot of good profits. And so we'll definitely scan all these stocks that are set to release earnings this week and see if we do have any opportunity to take a strategic trade through earnings on one of these names. All right. So definitely got a lot to discuss today, a lot to review. We got 3 potential swing trades. We'll be reviewing any stocks that are on your watch list for the week. And we'll definitely take some time here today to look at like AMD, Microsoft, Meta, Amazon, Apple, Intel into earnings and just see what we have coming on up. So if you guys have any questions, let me know. If not, we got about 4 minutes till market open.
Hey, I do have. Oh, never mind. Sorry.
No. Go ahead.
I have a question on SPY. The zone that you spoke about from 549.18 to 553.28.
Okay.
I do have a zone inside of that one. It is from. Oh, let me see if I can. This is 551.14 to 551.92.
And that zone's legit. Yeah, and I was getting ready to say, to make it simple, is there is a zone inside of that gap level, but that gap level is going to take priority over that zone.
Okay.
So you have that zone, and that's a valid zone, but then we see this gap. So anytime that I have a zone created, and it's a valid zone, but then I see there was a gap created through that zone, the gap takes priority over the zone. So I just remove the zone completely, and I solely focus on the gap.
Oh, okay. All right. That makes sense. Thank you.
Absolutely.
I have one, Josh,
What's up, buddy?
on the I'm not sure which tool do you use to determine that 5-10% correction and all of that. Could you show it for me?
Yeah, so here on TradingView, if you go over to your lines panel, you go down to your info line, and then you can go from the all-time high here on the SPY, click it, and then just drag it down to Thursday's low. And then you see it provides you with information, right? So we see that we had a 4.87% decline over the past 10 days. So that's how you're going to identify the percentage move, simply by using the info line. They're on TradingView.
No, okay. Yeah, I would have known any of this until you've been talking more and more about it, and you and Tom. So
yeah, and it's important to have these conversations because a lot of traders that really haven't been in the market for a while, and even traders that have, you know, I was on TikTok last week, you heard the story, everybody talking about us being in a bear market. They see this as like, oh, the market's crashing, the market's dumping, we got to keep moving lower. You know, let's get short. We're in a bear market. That's not the case. This is simply a pullback, right? We're just pulling back. We're starting to get close to potentially correction territory. That's above 10%. But again, we're just seeing a nice 5% pullback, 5% correction on the SPY. You've seen about a 10% correction or pullback on the Qs. And, you know, pullbacks and corrections in bull markets are healthy. And so that's what we're seeing right now at this point in time. And so it's always good to understand what kind of market are we truly in. Are we in a very clear defined bull market? Yes, we are. What are we seeing right here? Are we seeing the market drop on off and pull back? Absolutely. But that's all it is. It's a pullback. And as long as we hold some of these lower levels and this pullback is healthy, and so far this pullback looks pretty healthy, it's pretty normal, we can see the market find a bottom and then start to reverse back to the upside. And so that's kind of where our head is right now. Where's the SPY going to come down to? Is it going to be 5%? Is it going to be 10%? Where are we coming down to? Where do we find the market putting in a bottom? That suggests, hey, now's the time to think about getting long back up to these all-time highs and for the continuation higher across the board in the market. So that's why we're kind of scouting out some of these lower levels on the SPY, because that puts you right at a 5% correction down around, like 538, 537. And if you look at the Qs, this is about a 10% correction pullback on the Qs. Right into that lower zone was about 9%. So it makes a lot of sense to see this be the bottom on the Qs, right? It makes a lot of sense for this to be the bottom on the SPY, and we put in some kind of market structure off that Thursday bottom, and then we start to work our way back into those all-time highs. But could we still move lower? I mean, absolutely we can move lower, right? The SPY technically could see a 10% pullback and actually have a true correction. Where does 10% put us? 10% puts us down into this demand zone here on the SPY, which would also put you up against the 200 SMA. That's realistic. If we fall below last Thursday's lows, yeah, we could definitely see a true 10% decline to the downside, but we would still be in a bull market at that point in time. And that would still be, quote unquote, a healthy correction, a healthy pullback of, say, 10%. And that's still realistic. And so what would that look like here on the Qs, right? Into the 200 SMA, about 15%, still in correction territory, still in an overall bull market, even if we start to see the SPY and the Qs falling below last Thursday's low a day. I mean, again, anything could happen. But what we're looking for is the market to find a bottom like we did here. Find a bottom like we could have found right here. Bounce. Start to see some higher lows and higher highs. Start to see clearly we're starting to stair step back to the upside. We clearly see a bottom's been put in. That's all we're looking for. Based on this type of price development, how we put in a bottom, how we started to put in some market structure here and show signs of a reversal back to the upside, that's all we're looking for right here. And if we start to see this type of development here, we're going to start thinking about getting long for a few months out back into those all-time highs. But if we fall below Thursday's low a day, I think there could be a little bit more downside. And it would still be a healthy correction, a healthy pullback. We would still be in a bull market. But that could just lead to a little bit more downside here on the SPY and the Qs. So we'll keep it on watch day by day, right? Just day by day, we'll kind of see what we do here throughout this week, and we'll have a lot of clarity, in my opinion, by the end of the week. Are we actually seeing opportunity to start to play the market long, expecting that we get back into those all-time highs? All right, but we are all set, ready to rock, ready.